Welcome to The Explainer. Today, we are tackling a major puzzle that's playing out in the financial world right now. You've got traditional stocks, and they are absolutely soaring, pushing towards all-time highs. But then you look at the crypto market, and it looks like it's in a total freefall. So how on earth can both of these things be happening at the exact same time?
Okay, let's just look at the numbers here because they paint a really stark picture. The S&P 500, a huge benchmark for the stock market, is up a very healthy 17% this year. Pretty great. But then you have Bitcoin, the poster child for crypto. It's completely slammed on the brakes, reversed course, and is now actually down about 3%. It's not just that they're on different paths, it's like they're living in completely separate financial universes.
So, this brings us to the million-dollar question. Why? What single force could possibly be powerful enough to be a tailwind for stocks while being a massive headwind for crypto? Well, as we're about to see, the answer really revolves around one incredibly powerful institution, the U.S. Federal Reserve. First up, let's talk about the good news, at least if you're a stock market investor. We're going to unpack this bull market story and really get into what is fueling all of this incredible optimism. You know what's really amazing is that so much of the story comes down to this single number you see here, 87%. That is the probability that traders are betting on, the chance that the Federal Reserve is going to cut interest rates. This one expectation, it's the engine driving almost everything we're seeing in stocks right now. So you're probably hearing this term thrown around a lot, a dovish Fed. Well, this is exactly what it means. The market expects the central bank to make borrowing money cheaper. For companies, that's great. It's easier to expand. For investors, it makes stocks look way more attractive than, say, boring old bonds. You can think of it as basically rocket fuel for the market. And look, this isn't just some fantasy, it's not just wishful thinking. This feeling is being backed up by some pretty solid data. We're seeing inflation cool off a bit, and we're seeing consumer confidence bounce back. All of this has fueled a really broad rally, which is great to see. It's not just the big tech giants anymore. Investors are spreading their money around into a much wider range of stocks. And now, we have to flip the coin. Because while stocks are having a party, the crypto world is dealing with a totally different and, frankly, much more painful story. We're talking about a crisis of contagion. For Bitcoin, the chart is telling a pretty scary story right now. It is just smashed below a really key support level. Think of it as a price floor that traders were all watching like a hawk. When that floor breaks, it's a huge red flag in the market. It basically signals a serious loss of momentum. So, what's really going on behind this big slide? A lot of it comes down to this one key concept, the digital asset treasury. This was a super popular strategy for a while. You had companies literally taking on debt or issuing new stock just to buy a ton of Bitcoin and put it on their balance sheet. It was a massive leveraged bet that crypto prices could only go in one direction, up. And this slide, wow, it just lays bare the absolutely brutal consequences of that bet going wrong. The median decline for these companies that are tied to crypto is over 40%. But just look at the worst performers. Companies like SharpLink and Greenlane have collapsed by 80 to 99%. I mean, that's a near total wipeout. So the real terror in the market right now isn't just about these few companies going down. It's the fear of forced liquidations. What happens when these firms, who are holding massive amounts of crypto, are forced to sell it all at once to cover their debts? Well, that could trigger a domino effect, a financial contagion that just rips through the entire crypto ecosystem. Okay, so this isn't all happening in a vacuum, right? This massive clash between optimistic stocks and fearful crypto, it's sending ripples out everywhere, hitting other major global assets. Hey, remember that whole dovish Fed thing that's been so great for stocks? Well, it's having the exact opposite effect on the US dollar. The thinking is, if the Fed's about to cut rates, holding dollars becomes less attractive. And so the greenback has been sliding, hitting 5-week lows against other big currencies. And then you've got oil, which seems to be caught right in the middle of this giant tug of war. On one hand, you have the hope of a rate cut boosting the economy, which should push oil prices up. But on the other hand, you have OPEC pumping out a lot of oil, so there's plenty of supply, which pulls prices down. The result? Oil is just stuck, hovering right around that $60 mark. So, with all that said, where does this all leave us? Well, we have two major markets running on completely different, even opposite, stories about the future. And that creates a really weird, deeply unstable balance. So, really, you can boil this entire situation down to these two competing stories. The stock market story is one of pure optimism. It's a bet that cheaper money from the Fed will fix everything and send stocks to the moon. The crypto story, on the other hand, is a painful reality check. It's about what happens when a huge, leveraged gamble goes completely sour and the fear of contagion takes over. And that, right there, is the critical question we're left with. It's the real nail biter here. Can these two financial universes just keep existing side by side on totally separate tracks? Can all that optimism in the stock market just ignore the panic spreading through crypto? Or is a collision between these two powerful narratives simply inevitable? That's the unstable dynamic everyone is watching now.